Morning, Wealthy and friends. So today our group would like to conduct a debate session. So before we start, let us introduce ourselves. So me, Pricillia Devita, who is served as a moderator, and on my left side,
My name is Vivi Sofiana. I'm from the Pro Side team.
And my name is Patricia Devina A, who serve as a consul.
so let's start our sessions. Two teams who will present their arguments on the pro sides and con sides of the company fraud scandal. So to clarify the structure of our debate, so let's explain the roles of our two teams. So Team Pro, which is Vivi Sofiana, will be responsible for presenting arguments in favor of the topic. They will highlight the positive aspects, benefits, and advantages related to the company fraud scandal. This goal is to persuade you that the topic is favorable and should be supported. For the team con, on the other hand, will, which is Patricia Devina, on the other hand, will take the opposite sides. They will present arguments against a topic, emphasizing the potential drawbacks, challenges, and disadvantages associated with the company fraud scandal. Their objective is to persuade you that the topic has its downsides and should be approached with cautions and reconsiderations. For me, Pricillia Devita, as the moderator, my role is to ensure a fair and balanced discussions. I will pose questions to all teams, maintain the order of the debate, and ensure that the rules of engagements are followed. It's essential that we maintain a respectful and constructive atmosphere throughout the debate. So our hope is that by the end of these discussions, you will have a well-rounded understanding of considering both its merit and its drawbacks. We encourage you, our audience, to listen carefully, engage with our arguments that are presented, and feel free to ask questions or provide your thought as we proceed. So I would like to give you a brief explanations about the Company Acts. So Company X is one of the biggest commercial banks in the United States. So in our case study that we have chosen, so we determined that company is known as its fraud that happen inside the company, which is the fake account transactions. So I would like to give you more explanations about the fake account transactions that happen inside the company. So the bank or the company X has nearly $2 trillion in its hand in 2022. So the fraudulent acts that happen in the companies included transactions of fraudulent accounts, unauthorized credit card openings, and deceptive banking practices. The company has paid billions of dollars in fines, and they also has already fired their numerous employees and executives of the company. So for more than 10 years, the Company X has been accused of its employees engaging in the creations of accounts without obtaining customer consent. These actions were driven by sales target. As a consequence, customers were burdened with fees and interest charges. In 2023, the company faced a penalty of $100 million due to violation of sanctions. So the bank allowed foreign institutions to conduct prohibited transactions of $532 million through its platforms from 2010 to 2015. This incident is one among financial scandals that have plagued the bank in recent times. We get to uh, So I would like to give you more detailed explanations about the case overview of the origin of the scandal. So the employees in the entire company used an unfair approach as they initiated unauthorized deposits and credit cards for current clients. Customers were charged for unauthorized accounts which they did not create, and in addition, their credit score were lowered without their authorizations. The fact that the company's staff purposely created over 3.5 million bogus accounts raised concerns regarding a corporate environment whereby it appeared to facilitate dishonest conduct in an attempt to achieve quick profits. So for the ethical and professional implications, so basically the company scandal emphasized on the serious consequences that resulted from unethical and unprofessional acts. The scandals undermine general trust towards an entire industry, while the effects also transcend the specific case of the Company X. The corporate culture was completely devoid of ethical values like honesty, transparency, and accountability, resulted in enormous harm being done to the firm's reputation. Here are the situations when we're looking closely at some big problems in how banks and financial firms are doing things. And there have been some recent stories that show a lack of trust and issues with following the rules. Let's break it down. So today we're invited our pro and our cons. So in my left, on the left side, it is the pro team, which is Vivi Sofiana, and on my right side, it's Patricia Devina, which is the con side. So for over a decade, the bank faced accusations of its employee creating fake accounts in this company without customer consent, driven by implicit sales targets. So these illusion actions resulted in a plethora of fees and interest that customers hadn't approved. In 2023, the company faced a significant fine of nearly 100 million over sanction violations, and the bank allowed foreign institution to process 532 million of prohibited transactions on its Exim Bills platform between 2010 and 2015. This incident adds to the financial scandals that have plagued the bank in recent years. So now let's hear from Team Con. What are the primary arguments of negative impacts against these actions?
So it's actually resulting in many negative impacts that we can see from this case. The first one, we could see like from the customer. So the first one, it could distrust impacting the perception of the bank customer, since some customer may perceive Wells Fargo as a riskier bank due to the history of the misconduct, potentially leading to a loss of trust and prompting customer to consider an alternative. And then also a decline in the value of the stock, so it could impact the investor for their overall investment performance and also the financial goals. And this last one, this action put the company at a competitive disadvantage, so it could resulting in job losses for innocent employees.
Okay, so thank you for Team Con. Now let's continue our debate on Team Pro. So we continue with you. What impact do you believe these actions will have on the broader financial industry?
From our team side, I believe that this action will impact for broader financial industry for several factors. It highlights the need for banks to prioritize ethical conduct and customer trust. And second is there will be stricter oversight measures to increase transparency and accountability. Third, there will be improvement in customer protection and regulation. Fourth, the scandal itself forced a re-evaluation of cross-selling practices. And fourth, the financial institutions will begin putting more emphasis on fostering a culture of compliance and integrity. And last is that the bank will be more cautious about creating an environment that might encourage unethical behavior among their employees. So to conclude, the fake account scandal itself had far-reaching implications for the financial industry that resulting in increasing regulation, renewed focus on customer protection, changes in corporate culture, and greater emphasis on ethical conduct. And I think that's from our side.
Okay, thank you for your insight. So after all, you believe that this fraud can actually lead to a more cautious and to more regulations in the financial industry in this company. So thank you for your insights. So now questions for Team Con. So how can Wells Fargo regain public trust after this action, as you believe this will lead to the negative impact?
So for me, it's actually really hard for the company to regain trust with the customer, especially after what they've done. But maybe there are several steps that the company can regain to regain public trust. The first one, what they need to do is to acknowledge and take responsibility for their past mistakes. So the company should issue a sincere and public apology for this action and the harm caused to customer and the public. And then the second one, they need to implement leadership changes at the highest level to show a commitment, a new direction, and a culture of accountability. So this could include replacing top executives who were in charge during the period of misconduct. And then the third one, to avoid doing the same thing, the company maybe should commit to greater transparency in its operation and decision-making process. So maybe this include like disclosing how to reduce the past mistake and the measure it is taking to prevent similar issue in the future. And then they can also implement stricter compliance and risk management practices to ensure the unethical behavior and also the violation of regulation to not occur again. And they also need to conduct a regular audit and review internal processes to identify and address any potential issues. And then also they need to give the customer who will get a negative impact from the cases to get a compensation and restitution. So And then the last one, they also need to rebuilding public trust to patients, because like rebuilding public trust takes time and effort, and also it requires the company to not only correct past mistake but also to consistently demonstrate a commitment to ethical conduct and customer well-being over the long term.
Okay, well, thank you for Team Cons for your argument. So you believe that the company has a serious effect on financial institutions, although they have a significant issues and significant effect to the financial institutions. After all, you believe that there's still a way for the company to regain trust from the public. So now we continue. What were the primary triggers or factors that led to the company fraud case, and why are they significant? This question is for the pro side.
From our team itself, this case lies in several aspects. First, the consequences when a corporation prioritizes their profit over the well-being of its customer. This cause of weak ethical culture that allowed fraud activities. And second is that when employees were often pressured to meet unrealistic goals, these sales goals create intense pressure on employees to meet their targets that lead to unethical behavior. And third, the scandal become highly publicized, leading to reputational damage. This public backlash itself and loss of trust in the bank demonstrate the significance of maintaining public trust. And last is they will face legal and regulatory actions that result in significant financial penalties. I think that's from our team.
Okay, thank you for your response for Team Pro. Now we're moving to the con side. So which ethical code of conduct from EAE that has been breached by the company?
Based on my analysis, the company has at least breached the 3 conduct of ethics that is outlined by the International Federation of Contract. The first ethic is integrity. So it indicates that the company not being honest since they create fake accounts and charge like unauthorized fees, which suggests a lack of honesty and straightforwardness in their professional conduct. So integrity is actually a fundamental principle, and this action seems to. The second ethics is professional competence and care. Since the allowing of creation of fake accounts and unauthorized fees suggests a lack of due diligence and adherence to applicable standards. So professional accountants are required to maintain a professional knowledge and act diligently in accordance with technical and professional standards. Failing to do so may be considered a breach of this principle. And the last ethic is professional behavior. So the case stated that allowing fraudulent transaction and engage in fraudulent activity as described in the case would certainly discredit the accounting and financial profession. Professional accountants are expected to comply with relevant laws and regulations, and actually they need to avoid action that bring disrepute and to the profession. So the action described in this scenario, if proven to be correct, will likely be considered unethical and a breach of the fundamental principles that guide the conduct of professional accountants. Violation of these principles can result in regulatory action and sanction against the individual and the organization involved. That's all from my opinion.
So from your opinion, I get that the company has breached 3 from 5 of the code of ethics from EAE for the professional accountant. So I think from your opinion, it is clear that the company has breached three of the code of ethics from five. So I think it's a serious violations of these ethics of professional content. But from the pro side, it is stated that the company fraud case has triggered the regulatory changes and reforms that prevent such scandals in the future. For instance, it has led to stricter oversight by regulatory bodies. So from the pro sides, can you mention what lesson can other financial institutions from the company case that you can mention?
The lesson that other financial institutions can learn from the case itself, they must prioritize the interests of their customer, for example, by applying customer-centric approach that involve ensuring all product and services that offered are in the best interest for the customer itself. And second, bank should foster a culture where ethics and integrity is at all levels of the organization. And third, they should establish and maintain robust compliance and risk management programs to identify and mitigate related fraud activities and deceptive sales practices. And fourth, banks should also be transparent about their sales and practices, so customer will be fully informed about the products that they will be offered. Bank should be also maintain their good reputation, because once it damaged, it can be challenging to rebuild it back. They also must invest in employee training and education program to emphasize ethical behavior, compliance, and importance of putting customer first. And from the past scandals, they can study it back to not only their own but also those of other institutions, to understand the mistake that has been made and the consequences that can serve as a valuable learning experience. And the last, maybe they can carefully review their incentive structure for employees to ensure they do not inadvertently encourage unethical behavior. I think that's from our
For Team Pro that just mentions what lesson that can be learned from the financial institutions. Okay, so now let's jump into our conclusions. So today we have an insightful debate from the company acts fake account scandal, which actually reflect the broader issues that we see in the financial industry. So we already explored the negative and positive impacts, and we already discussed the potential regulatory changes and delve into the triggers of the scandal. So the consequences of prioritizing profit over ethical responsibilities and customer trust are really significant, and the significance of corporate culture in preventing misconduct cannot be overstated. So in the wake of these actions, we've seen a new regulatory about the transparency, compliance, and imperative to put customer first. So as we conclude, it's clear that the public trust in financial institutions is really important, since the actions that erode this trust have far-reaching consequences, not only for the institutions involved, but for the industry as a whole. So the lessons from this case are invaluable, reminding us that the ethical conduct that the company are doing and culture of integrity are fundamental to a healthy and thriving financial industry. So we hope that this debate has made a way on the complexities and challenges faced by the financial institutions and inspire positive changes and ethical behavior in the future. So thank you for the team, Vivi and Patricia, for your thoughtful arguments, and to our audience for your participation. So I think this already concludes for our debate. Thank you. So I would like to conclude the discussions on the debations of negative consequences that and positive consequences. So for the negative consequences that has been discussed by Team Cons, so the first one is distrust among customers. So for the distrust among customer or loss of trust among customers is the unethical actions that could create distrust among customers, leading them to question the bank stability and reliability. And for the second one is the stock value decrease or decrease in stock value. So it means that a decline in the bank stock value can result in financial losses for investors. And for the third one is the competitive disadvantage. So these actions puts the company acts at a company competitive disadvantage that potentially leading to job losses for innocent employees. And for the positive consequences that has been discussed previously by the Team Pro, so the first one is the stricter oversight. So the scandal in the Company Acts will likely lead to stricter oversight measures to increase transparency, accountability, and customer protections. And for the second one is the focus on compliance and integrity. So the Company Acts will put more emphasis on fostering culture of compliance and integrity with a greater emphasis on ethical conduct. And for the third one and the last one on the positive consequences that has been mentioned before by Team Pro is um, changes in sales practices. So the financial institutions will revise their sales practices to ensure that they are more transparent, customer-centric, and aligned with customer interests. So for the recommendations that has been discussed by our group and previous debate sessions that we can recommend from the argument that has been discussed by the previous debate is that the valuable lessons that can be drawn by other financial institutions from the Company X case, specifically in the following key areas. So for the first one is they have to prioritize customer interest above any other interest, above their own interest. So first one is very crucial to always put the interest of customer first and ensure that the products and services offered are designed in their best interest. And for the second one is to foster a culture of ethics and integrity. So, a strong ethical and integrity focused culture should be cultivated throughout the entire organizations from top level management to frontline employee. And for the third one is the compliance and risk management. So, the robust compliance and risk management programs should be established to effectively identify and mitigate the potential fraud risks. You have to ensure that this accident, that this activities or any other frauds won't be happen in the future in the company or any other financial institutions in the US or any other countries. And for the fourth one is the transparency and customer information. So there should be complete transparency in all sales practices and customers should be fully informed about the products and service that they are being offered. So in the future, the customer should give their consents about their sales transactions or about the sales that are offered to them. If you found this debate valuable, don't forget to give us a thumbs up and subscribe to our channel for more thought-provoking discussions. And if you have suggestions for future debate topics, please share them with us in the comments below.
And I would like to say thank you for being part of our debate today. Your support and participation mean the world to us. We look forward to seeing you in our future debates and discussions.
Until then, stay curious, keep exploring, and never stop asking questions. This concludes our debate video on company accounting scandal. Have a fantastic day. Bye bye. Thank you.